Welcome to Canberra Affordable Bookkeeping. My name is Dean. In this video, I'm going to work out a question here. And this question, if you have a question that you are struggling with, you will be able to work it out yourself. And if you're still struggling to work it out, let me know under the post, this one, and we can work it together. The reason I'm making this video is only to help those who are learning accounting and they're finding it difficult to learn some accounting concepts and rules. These videos that I'm going to be making and posting on my Facebook page, which is Canberra Affordable Bookkeeping, or I post them on YouTube as well. These videos are only for educational purposes. You cannot use them as professional advice. If you need help in the area of bookkeeping, let me know, and I will help you in that area. So this question, if you have a question that is asking you to calculate the supplier's balance or any related like that, let me know. If you have learned something from here and you can work it out yourself, that's great. So let's look at the question that I have written on the board here. So this question says, at the beginning of the year, the supplier's account has a balance of $2,000. During the year, the company used $1,200 of these suppliers for its operations. How much was the balance of suppliers which was unused at the end of the financial year? This one, it can be at the end of the week, it can be at the end of the month, it can be depending on what time frame they're asking you to calculate the balance. So it cannot be only at the end of the year. So if you have a question like this, first of all, you need to know what accounts are involved in each of these. And you must also know the rules of debit and credit before you work out a question like this. So you have this balance of suppliers. This is an asset account. So let's use a T account to help you see what we're doing here. So if we have suppliers account there as a title here, as a title there, and we have been told at the beginning of the year this amount was the opening balance, and you know real accounts, all accounts that are reported on the balance sheet, this account, they are called real account, and the balances are carried forward. So seeing this one is an asset account, and we have been told this amount was the opening balance, we put this one the beginning balance. Making it short because the space here was not allowed to put the whole sentence like beginning balance. So it's BEG, and then balance is not, I haven't written that in full. So just only to make it short. Beginning balance has been given, that's $2,000. So let's ignore that dollar sign and put only $2,000. So this was the balance at the beginning of the year. The other amount that has been given here is $1,200, which was the balance used during this period of operations. So that amount is the amounts of supplies used. And when an asset has been used up, it becomes an expense. So with this let's think of two accounts that are involved here. One, because this amount of supplies has been used, that one will become supplies expense. This one, supplies expense, and what will go to the credit side, because supplies expense is an expense account. And you remember, expense account goes to the debit side. Let's think of what will go to the credit side. What will go to the credit side will be supplies, which is an asset, and will have the same amount. So the debit side, supplies expense, we put $1,200 there, and suppliers, $1,200. And you remember the accounting equation rules that the sum of total assets equals total liabilities plus total equity. With this, when you have amount on the debit side, that amount must be equal to what you have on the credit side. For this case, we have supplies expense, $1,200, and on the credit side, you have suppliers, $1,200. We have $1,200 on the debit side, and that equals to what we have on the credit side. So that accounting equation is balanced. And this supplies, which is what we have on top there, this is adjusting entry. So with this one, we're doing at the ends of the year, that adjustment will be $1,200. So that amount we have on the credit side, because this one here, this has been used up, and that one will go to income statement. You know, expenses are reported in income statement. This one will go to income statement. This one, we bring it here to get the difference of what balance will remain unused at the ends of the financial year. So what you will have here, this is the ending balance. You can say end balance. Get the difference of these two. What will you get? This one will be, if you subtract this one from here, you will have $800. This $800 here is our ending balance. Where will it go? This will be reported. It will go to balance sheet. It's one of the main accounting reports. So with this is balance sheet, where this is where it will go under current assets. So this is our ending balance, and this is what the question is asking you. It's asking you for what portion of this supplies remain unused at the ends of the financial year. This is what you will get, and the report where it will go will be balance sheet. So that's what this video is about. That clear to you? Let me know how I can improve this, because I will be making more videos, and the purpose for that is to help you understand accounting rules and concept. Thank you so much for watching. Let's meet again in the next video.